everyone. This morning we are going to run some live property analysis from MLS using the BiggerPockets rental calculator. A lot of buyers right now looking for deals. House hackers wondering if now is a good time to buy. We're going to pick a couple examples off of MLS, run the numbers into BiggerPockets calculator, and see how the numbers work out. So the first thing we'll do here is I'm in MLS, select multifamily. We're actually going to do a map search. That way we can grab an area pretty quickly. So we'll do multifamily, active status. Let me zoom out here, jump down to the Boston area. And we'll just do a polygon search. Won't get too fancy here. Stay in the 95 corridor. All right. We'll do that search. We'll go up to maybe $1.2 million, and we're going to be looking primarily for 3 and 4 family properties. And again, none of this is prepped. I'm just going to pick some right off of MLS. Let's see. It's a nice 3-family, 900,000. All right. Does it have rent amounts? Yes, 18, 18, 18. All right, here we go. So, where is this? In Dorchester? Wilson, yeah, I think it is. All right, so what we're going to do, just making sure it has all the information we're going to need. Primarily, we're going to need income data, which it has. We're going to assume that one of these, so lease no, we're going to assume this information is accurate and that everybody's tenant it will. And so every unit looks like it's rented for $1,800. So what we're going to do is, we're going to steal this address, 57 Wilson Street. We are going to jump over to the BiggerPockets calculator. All right. Guess it's Mattapan. All right, so we'll just do that for now. They were asking 900,000. We're going to assume for the sake of these analysis that it's a 3.5% or a low down payment FHA loan. We'll do 3.5%. Purchase closing costs, I'm going to estimate about 10,000 on a property of this size. And we're going to assume kind of a 3% down payment. Oh, it used to, yeah, there we go. 3.5% down payment and around 3% interest rate. Going to put in our FHA MIP. It's an upfront mortgage insurance premium. And then loan term is 30 years. All right, income. Each unit was $1,800, so we're going to add 3 units at $1,800. All right. Don't know if it had laundry. Let's see if it had laundry. Back buildings rent $1,300 a month. So it has a laundry room, but not being used. Now, exterior has a large outbuilding with more space to get together. Back buildings rent $1,300 a month. First floor and back building share electricity. Back building has. So, looks like there's some extra rental income here. I'm not super clear on it, but it does sound like it has a little bit of extra rental income. I'm gonna not include that for now, but we should circle back on that based on how the numbers land, and we'll that might make this one really nice. So no laundry income that we're aware of, so we'll move on to expenses. So we'll look up property taxes. We're gonna assume MLS is correct for the sake of this exercise. So 78.9 annual. Property of owner-occupied insurance policy on a property like this should be about $1,500 a year. repairs 5%, vacancy 3%, capex 5%. I'm going to assume you're going to live there and manage it, so we'll do 0% management fees. Electricity. So now it gets a little subjective on some of these expenses. I'm going to share with you how I use some of my back of the envelope numbers. This is up to your discretion. You can increase them or decrease them as you see fit. And some properties will have higher expenses, like if you have owner paid electricity or single electrical panel, obviously your electric bill is going to be higher. If it's split electrical panels, then that would be lower, and that would be passed on to the tenant. So property specific, but for the sake of this analysis, I'm going to just kind of share with you with what I do. So for electricity, assuming that electricity is split out, and I'm just paying the owner panel for exterior lights, common area lights, smoke detectors, I'll typically put in about $50 a month. We're going to jump over to see if we can get any insight into the gas bill, but usually the gas is split and there isn't a landlord gas panel. Let's see. Hot water, radiators, gas. So it doesn't seem to indicate, at least on the listing, if it's split out. It usually is. Back building has gas heat. So definitely a little bit unclear from the listing. So we'll take, we are going to make some assumptions, but this is probably going to be zero. There typically isn't a public gas meter unless it's used for something like a hot water heater for coin-op laundry. Water and sewer, I typically do $20 per bedroom per month. Again, back of the envelope, each municipality's water rates are going to be different. Water usage is going to vary from tenant to tenant. So we have 9 bedrooms here, and so to estimate my water and sewer bill, what I would do is I would take 9 bedrooms times $20. Bedrooms times $20. It's $180 a month, which works out to about $2,200 a year, which sounds right to me. HOA fees on a multifamily is going to be 0. Typically, you'll have municipal trash or curbside pickup, so that'll be 0. And then on multifamilies, I typically will include 2 things. So my snow and landscaping, and that could be $100 a month. Again, depending on who you find and how much it snows and how you handle that. But typically $100 a month, $1,200 a year. And then I do pest control. And typically I'll do that at about $75 a month, which works out to about $900 a year. That might be a little high on a property like this, but I'd rather overestimate than underestimate. All right. So go ahead and finish this analysis. All right, so where did we land? We landed with $5,400 in rental income. Now, this does assume all 3 units at $1,800 a month, and if you're going to live there, one of those, you're going to be occupying one of those units, and so you won't be earning the $1,800 a month. So this will actually go down to $3,600. So we're going to bring this down. Probably won't be able to, I'm going to have to actually edit the details. So we're going to assume you live in 1 unit, like that. And then we're going to update our analysis. All right. So let's just verify our numbers. $3,600 in rental income, $5,300 in expenses, including vacancy and capex, repairs, etc. And then your loan details, so your purchase price, your loan amount, your interest rate, etc. And just to verify all of our numbers down here, your mortgage, $3,662, taxes, $650, insurance, $125, and then your variable and fixed expenses are another $870 or so. Now, if we go over to our variable expenses, you have $108, $180, $180, $468 that you're not actually spending every month. These are reserves. So just something to keep in mind. Should you allocate this money for future expenses? Absolutely. But just something that I often see overlooked is this is not money that is necessarily spent every month. This is money that is used to reinvest in your property and or save for unexpected vacancy or unexpected repairs. So just something to keep in mind. That 468 is actually, or some portion of it, is very likely to stay in your bank account every single month, and you can see how that will start to pile up very, very quickly. So now let's go back up to the top and let's see how we're doing. So, minus $1,700 a month in cash flow. That doesn't sound great, right? Well, the question that I would ask you is, could you rent a 3-bedroom in Boston, or Mattapan specifically, for $1,700 a month? Because the way I look at this negative cash flow is essentially the monthly amount that you are going to need to contribute to the mortgage payment to live in that property, right? And so if this number is better than what you could do renting in a similarly sized unit, then I think you're a step ahead of the game. And so if, let's say your rent is going to be $2,500 a month, or let's say your current rent is $2,500 a month, and you could buy this property with 3.5% down, and then your new monthly rent to yourself is $1,700, you are decreasing your monthly expenses, living expenses, by $800. So $2,500 down to $1,700 is a savings of $800 a month. When you move out, if your rent for this unit, expected rent for this unit, is higher than this number, that will be your expected positive cash flow. So if this unit rents for $2,000 a month when you move out, you will be positively cash flowing $300 when you move out, plus the $468 that you're setting aside for vacancy, CapEx, and maintenance, plus equity pay down, plus any property appreciation that has happened during your ownership period. Now, one thing we didn't, and so hopefully that makes sense. One thing on this particular property is, it sounds like there is this outbuilding, or this building in the rear. Back building rents $1,300 a month. Well, let's go back to our analysis. Let's add a rent. Put back building, $1,300. So again, your unit 0, unit 2, $1,800, unit 3, $1,800, back building, $1,300. Now, it also says that unit 1 and the back building share electricity. So to be fair, let's go to expenses. Right? Now, electricity. So if you're paying public meter and you're living in unit 1 and you're paying for the back building, this might be closer to $150. All right. Well, now let's update the analysis. Okay, so now negative cash flow of minus, let's call it $700. So now your contribution to the rent for the mortgage for this building is $700 a month. And if your current rent is $2,500, you're now saving almost $2,000 a month back into your pocket, and that's to buy this property. Let's see, rental income moved up. Yeah, so hopefully that makes sense. So one thing I advise my clients, my buyers, to look for in properties is this extra ability to earn income. That can be done with things like garages. In this case, it sounds like there's a building that's used either for storage, or potentially maybe a business is run out of it. I'm not really sure. The listing isn't super clear on that, so we'd obviously have to dig into that during a viewing or a showing. But look for these other opportunities to rent parking spaces, rent garages. How can I boost the income, the rental income at my property, to help keep my out-of-pocket to a minimum? So if I were looking for a 3-family in the Boston area and I didn't mind, kind of the Mattapan area, I would go look at this building. No guarantees we're gonna like it, but that's how I would do my first pass analysis on it. And hopefully that's clear and makes sense. If not, send me a message, drop a comment on the video with your question, and I'll be sure to get back to it. All right, thanks for watching.